Hi everyone, welcome back to my channel. If you're not familiar with who I am, my name is Canna Campbell. I am a licensed financial planner with over 22 years experience, but more importantly, I'm here to help you with your financial journey, with living a more authentic, richer, and hopefully healthier, happier life. Now, today's video, I want to share with you exactly why I invest in shares, why I'm so incredibly passionate about using shares as part of my FIRE strategy. I also want to share with you today about what I have learned along the way, including all the mistakes, the failures, and the regrets. And I also want to share with you a bit of a, maybe controversial or polarizing topic, and that is AI. How I'm not scared of AI ever replacing my job, but actually I'm embracing AI to help make sure that I do retire successfully. I retire under my own terms and conditions, and I make great, intelligent, wise financial decisions that are always in alignment to my FIRE strategy. Now, on that note of AI, today's video is proudly sponsored by Moomoo, which is really fitting because they have an amazing platform for investors like you and me that is backed with AI. Now, I know a lot of people feel really overwhelmed when it comes to investing in shares. They're motivated, they're inspired, but when it comes to actually pressing buy or actually doing this, it can feel incredibly overwhelming and sometimes even paralyzing. And this is why we never actually get started. And we get to the end of the year and we think, wow, I haven't actually achieved my financial goals. So today I really want to share with you my story and help subside any fears or blocks that you may have so that you feel empowered and you have the practical steps to actually get started and be a part of this incredibly powerful community. So I'm going to start off by sharing with you the 3 biggest mistakes that I made when I first started investing. And I'm going to share this with you because I don't want you to make the same mistakes that I made, because I cost myself a lot of time and money. So the first thing is when I first started, I was so fixated on my gross figure or my net worth figure of my investment portfolio. But the truth and reality is if I wanted financial freedom and to be able to retire early, I needed passive income. I needed my dividends coming in. So the moment I realized this, I shifted all of my motivation, my energy, my focus, and even shifted my goals to be really focused around building my passive income. So instead of having a goal to have a $200,000 share portfolio, I focused my goals around building a $10,000 per annum passive income stream through dividends. Now, the moment I did this, I noticed a huge breakthrough in the efficiency of my FIRE strategy. So if you've started investing, that is perfectly fine if you have gross worth and net worth goals, but please make sure you include some passive income goals, because at the end of the day, this is the ultimate definition of financial freedom, living off your passive income so that you don't have to work unless, of course, you want to. All right, regret number 2, and that is having an emotional, irrational, knee-jerk reaction to a natural market pullback. Yes, I distinctively remember this moment where I sold my entire share portfolio, which not only meant I crystallized a loss and undid all of my hard work, it meant that I was no longer entitled to earning dividends anymore because I'd sold those shares. Now, yes, if I could go back in time, I would not have reacted that way. And in fact, I probably would have looked at it as an opportunity to buy the same quality, long-term growing investment assets at a discounted price. And this is why it's so incredibly important to use the right investing app that can keep you educated and informed, particularly ones like Moomoo, which you can literally have in your pocket and learn and watch on the go. So if you've started investing or you're building your share portfolio and there's a market correction, maybe even a crash, don't panic. Educate yourself and perhaps look to the buying opportunity that exists right now. Regret number 3 is getting completely distracted by FOMO, and that is following silly short-term hot tip trends that actually came from well-intended people, but people who didn't really understand the actual risk involved. Now, fortunately, I was able to catch this mistake, this habit, and quickly get my portfolio back on track. And the way that I did this was coming back to the proven, the timeless, the long-term buy and hold strategies that actually work. So again, if you're starting to invest or you're building your share portfolio, be very careful of those hot tips, those trends that come in and out where people don't necessarily know the risk involved and also know the amount of time that's involved to actually generate the return that you expect. Again, this is a brilliant reason to be using high quality investing platforms like Moomoo. They can educate you, they can explain things in really simple terms, and you can actually lean on a really well diversified community and see what other people think, feel, and are doing about certain hot tips and trends that are floating around, as they always do time after time. All right, now that I've aired all of my dirty laundry as to where I went wrong when I first started investing in shares, I now want to share with you why I love shares so much and why investing in shares is such an integral part of my financial freedom strategy. And I think once you've heard what I have to say about shares, you'll realize that shares actually for you could also be a very powerful asset in your own wealth creation strategy. So the first thing I love about investing in shares is it doesn't take a huge amount of money to actually get started, to actually the commencement, the birth, the adventure ahead of you when it comes to investing. You think about property, people have to save for many, many years before they can actually buy that investment property. I know for myself, I saved for like 6 years before I was able to buy my first place. However, when it comes to shares, you can actually get started with a really small amount of money. Thanks to fractional investing apps such as Moomoo, you can literally get started with as little as $10, and you can set up a regular investment plan so your portfolio doesn't just start, it actually starts to grow. And this is where things get really exciting. The second thing I love about investing in shares is the dividends, and the fact that dividends are completely yours. When you think about, say, an investment property and you receive rent, you've got to pay a whole pile of fees out of that rent money. The insurance, the strata, marketing, maybe a property manager, the wear and tear. It really does eat into your income. However, when I look at my share portfolio in comparison to my investment property, my dividends are all mine. I don't need to give it out to anyone else. And for me, I find that incredibly satisfying because I actually end up with more money in dividends than I do in my investment property portfolio. The third thing I love about shares, and I will say, I think this is the most underestimated benefit to investing in shares, and that is the diversification. It is so easy to diversify your portfolio to help control that risk. Whether you're using ETFs, listed investment companies, or perhaps you're cherry picking your own shares for your own portfolio. Again, this is where brilliant investing apps that offer free research can be incredibly helpful because they can help you make brilliant, wise, intelligent investment decisions as to which stocks to buy, which stocks to maybe hold off on buying for a little bit, or which stocks you might want to look at potentially selling further down the track. If I was to compare this against, say, a property, all your money is tied up in that one property. You are really subject to the risk of that performance in that street, in that apartment block even, or even that suburb or that area. With my own share portfolio, I have investments across, say, 30 different companies, ETFs, and listed investment company. I'm able to proactively and intelligently manage my risk. Fourth thing I absolutely love about shares and why it's really part of my financial freedom strategy, and that is liquidity. So if something was to happen, I can actually sell a parcel of shares. Of course, yes, I have emergency money, so hopefully I never need to sell my shares. But should I ever need to because something catastrophic happens in my personal life, I can sell $10,000 worth of shares. Whereas when I look at property, if I had a situation where I urgently needed money beyond my emergency money, I would have to sell the whole entire property, which means capitalizing tax, which means obviously a whole pile of fees and expenses like legal fees, real estate agents' commissions, and all sorts of expenses would be involved. And that would be really detrimental to my strategy. Now, it goes without saying, you should always have emergency money set aside to your investment portfolio, whether it be property, whether it be shares. I love the fact that if I need to, I could sell, say, $1,000 worth of shares or $100,000 worth of shares, and I'm really able to quarantine the financial impact and cost of that. And then the fifth and most important reason why I love investing in shares, and I think it's probably the most important foundation of my FIRE strategy, and that is the passive income stream from dividends. Every year when I'm doing my taxes, I look at how much passive income I have been earning from my shares, and I absolutely love seeing it consistently and organically grow over the long run. When I finally decide to pull up stumps and stop working or maybe go down to part-time work, I love that my income is actually going to outgrow inflation, that I'll always have some money left over that I can reinvest back into the portfolio, that I'm never going to erode into my portfolio, that that income will consistently grow over the long run because I've made smart, intelligent investment decisions. I've used quality, independent research that has allowed me to capitalize on those brilliant buying opportunities, where I have been able, and I will continue to be able to, buy the same quality assets at a discounted price, which means I'm buying the same growing passive income streams, but at say 10% cheaper or even sometimes 20% cheaper. This is the value of high quality investing apps. Now I want to move on to the topic of AI. Now, I know a lot of people are fearful of AI. They feel like they're going to be replaced and they're going to become almost like obsolete with AI. And I completely understand that. And I will admit, I felt a little bit like that myself, particularly as a lot of people are jumping on, ChatGPT to create their own financial plans. But this is what we are missing in the big picture. Apps like Moomoo are using AI to help you build your portfolio, your investment portfolio, help you achieve your financial freedom, retire early goals by using AI. So in fact, when you're using apps like Moomoo, you can actually use the app to actually help build your portfolio, to help you understand what you should be investing in and why. What are the opportunities that exist out there? Where are the areas in your portfolio that need further diversification? Or perhaps where are the areas in your portfolio that are actually over-diversified and you've oversaturated yourself to a particular asset class or company or sector? Even within the Moomoo app alone, there are some incredible tools that are based around AI, such as market analysis tools, which cuts through all of the endless data and actually helps you see trends and risks that actually really matter to your portfolio, your strategy, and your goals. Then of course, within the Moomoo app, there are screeners and insights that allow you to explore different investment opportunities, which obviously include shares, they include ETFs, listed investment companies, and those global markets if you need that further diversification. And yes, all of these tools are available to you for free within the Moomoo app. Moomoo are literally giving you the same tools that professional traders use to the everyday investor like you and me. Now, by no means is my financial strategy about speculating or day trading. Far from it. I'm very much a long-term buy and hold investor. I reinvest all of my dividends. I hustle on the side so that whenever I have spare money, I use that money immediately to go and buy more shares, ensuring that my portfolio is properly diversified. I'm making the most of buying opportunities when those market corrections happen. And of course, I'm turning down the volume on all the silly noise, all the distractions, all the temptations to follow the wrong people's advice. So as I wrap up today's video, I want to remind you about the importance of getting started and being consistent with your investment portfolio. Don't make the same mistakes that I made. Get ahead of the game. Use smart, intelligent investment apps like Moomoo so that you can quickly and easily do your research before you start. As you start, you can start with a small amount of money. You can also set up a regular investment plan. You can reinvest all of those dividends. And most importantly, you can continue on educating yourself and making sure that you are informed about your financial strategy and portfolio through the AI-based apps. And finally, my most important piece of advice: make sure you have some empowering, exciting financial goals. Because once you have those financial goals, you can build a really clear financial strategy that gives you an amazing sense of purpose and direction. It will help minimize getting distracted, help avoid that dangerous advice, and actually allow you to see your dividends grow over time. All right, everyone, thank you so much for watching. This is Sugar Mama TV, and I am Canna Campbell. I'll see you next week. Ciao for now.